The next asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And another phenomenal 24 hours we have here as we scooped over 1,400 pips on multiple buy entries as we capitalize on this bullish momentum all the way to the upside. In fact, congratulations to everyone who has been part of this profitable journey. Now, in fact, the weakening US dollar and Treasury bond yield following the Federal Reserve meeting have bolstered safe haven assets such as the gold. Now, the first decisions to maintain the interest rate at 5.25 stroke 5.50% aligned exactly with the market's expectation. Now, during the press conference, the Fed chairman Jerome Powell's statement about the Fed's willingness to cut rates even without a U.S. economic recession in 2024 resonated with market participants' expectations as well. Now, today the focus will be on the key US economic data such as the weekly jobless claims and retail sales reports, which will likely guide market movements today. Now, given this landscape, it is very, very important to secure all existing positions at this juncture while remaining vigilant for new trading opportunities. Now, before we go into that, let's run through what really happened at the beginning of the week for the sake of those who are joining us for the first time. Now, if you look at the structure on the 1 hour time frame, the beginning of the week started with a strong bearish momentum, though price was initially confined within the $2,007.50 level and the 1995 area, just oscillating around that our key level situated at the $2,000 mark, as you will see here. But one thing interesting we noticed during the first session for this week was the fact that price action was trading more closer to the support line of the range, and in fact trading below our key level, which is situated at the $2,000 mark. And of course, you know how we do it in this community. Whenever price action falls below our key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, with this observation in mind, we did position ourselves below the support line of that range at the 1995 level to join our first sell position for the week. Then remember that we had another level situated at the $1,991.50 level to capitalize on the downtrend move. And we did join these two moves. The first one gave us about 200 pips before the bullish momentum came in, while the second one dropped to about 150 pips before the bullish momentum came in. So we had about 400 pips going into Tuesday's trading session, but the inability of sellers to break through the 1976 area made us to move all stop losses to secure the position. And if you had done that, you must have been taken out of that sell position with a reasonable amount of profit. Now, during our live session yesterday, we begin to notice a consistent pattern here. The first one is the fact that price action has been bearish since the beginning of the week, and in that regard, we were able to connect a series of lower highs to give us a couple of trend lines, which we said we will be using to guide our trading decisions for yesterday. And one thing we said here yesterday is that to be in alignment with this descending trend line, a breakdown of the 1976 level would be a good opportunity to join the decline to the downside. But we did mention that if at any point in time yesterday, price action breaks out and retests the descending trend line, then we will be good to buy the XAUUSD. And in fact, prior to the interest rate decision yesterday, I was already in the buy positions as we had the level at the $2,983.50 level, triggered with a stop loss of about 60 pips thereabout to protect any sudden pull down that could risk the buying potential here. But the stop loss was enough to hold that buy position. And then we had buy stop orders above the $1,991.50 level, the $2,000 area, and of course the $2,007.50 level, which triggered all buy positions, giving us 4 positions as price action rose into the 2040 zone, giving us over 1,400 pips from 4 entries on this one. Once again, congratulations to everyone who took advantage of this opportunity. Now, for those of us who still have a buy position running at this point in time, it is very, very important that you move all your stop losses anywhere below the $2,029 area, somewhere around there. And while you do so, please remember that you do want to be given enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying, or are there chances that sellers may come in, maybe as a result of profit taking activities? Well, if you look at the 1 hour time frame here, you will see that since price tested the 2040 during the Asian session, price action has transitioned into a range. As you will see, it is confined within the 2040 and the $2,029 area in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours right now, further emphasizing the level of indecision going on in this market. Now, if we take it a step further to mark out the lines using the line chart, you will see that we have something like an uptrend continuation pattern even within this range. I would like to lessen the pixel on this one. If we connect the series of higher lows and lower highs, we have something that looks more like a pennant to work with. So if I now readjust this based on the weeks of this candle, we should be having something like this, and everything is looking as if price action wants to continue the uptrend scenario, and of course we want to be on standby to capitalize on it. So personally, I have a buy stop order already above the $2,040 area so that we can maximize the potential of this bullish move. So let's see how far this momentum is going to go. We are at a crucial juncture right now where anything could actually happen. Then, in as much as we're looking out for buying opportunities from this area, we cannot ignore the potentials that sellers could come in as well. Now, remember that we have this impulsive move since yesterday, and it is very, very likely as we approach the end of the week that those who had bought at a very cheap price, let's say around the 1,980, scooping in over $40, more than $60 from a particular position, might want to be considering taking some profit as well. So in that regard, we cannot ignore the potentials that sellers could come in from this area as well. Now, if you look at the structure here, you will see that selling pressure have been persisting around the 2040, and in the last 3 to 4 hours ago, we saw another rejection of that area, giving us signs that buyers are finding it difficult to break out of that barrier. Now, if this persists, we may see a situation where price could drop below the support line of that range at the 2029, where a retest of structure will be a beautiful confirmation to join a downtrend move. And if that is going to be the case, we might be looking at levels at $2,007.50 level, $2,000 area, the 1,991.50 and the $1,983.50 level for TP targets for that sell positions, where we shall exercise patience as soon as price action gets into this level and wait to see if buy pressure will resume there to join the uptrend continuation. So let's keep that in mind while we also mark out these levels on our chart. So basically for today's trading session, we have a center of focus between the 2040 and the $2,029 area, where depending on the direction of the breakout will give us an insight into where price may likely close by the end of this week. So mark out these levels on your chart. You really need them, and let's see how the market will play out from this particular area. So I hope I made myself very clear here. I will be taking some time off, to 10 to 15 seconds off, to see if there are any questions before we go ahead to round off on today's trading session.